tax loss harvesting. What is it, why it matters to your investments and your financial planning, and so much more. Now, tax loss harvesting is a term utilized for that non-retirement or that non-qualified type of brokerage account. So it does not apply to 401ks, IRAs, Roth IRAs, or TSPs. Now, tax loss harvesting is also only calendar year end based. So it is October currently. We have about 2 months left here to utilize this tax loss harvesting concept if applicable to you. Now, on the tax loss harvesting, you can always log into your type of account, look at your realized gain loss for the year, look at your unrealized gain loss for the year. It'll also have on there your short-term gains and losses. You've held that security for less than 1 full year. And it'll also show you your long-term capital gains and losses. You've held that for longer than a year on there as well. Now, with tax loss harvesting, you're allowed to deduct up to $3,000 per calendar year in total losses offset from your income you're reporting. If you have greater than $3,000 in losses, you can carry forward those losses in future years. Now, you say, why wouldn't I do this? Well, maybe you've already had, for an example, $10,000 in gains for this year, and maybe you look at some of your securities and stocks and you have some that you want to sell for $10,000 at a loss. So you now have $10,000 gain, a $10,000 loss. Those two go together, they net a $0 tax on there. Or maybe you have no gains for this year and you have no losses, but you have something in there that's just not been performing well, it's not doing that great. You want to get that $3,000 potential deduction. You could sell that for $3,000 as well. Now, keep in mind, it'll always pair long-term capital gains, losses and gains first, short-term capital gains, losses and second. Now, if you have net remaining, a mix of the two afterwards, it will give you that net amount as well that you could potentially use to deduct from the taxes. Now, keep in mind also of the wash sale rule. You want to avoid that as well if you're implementing this strategy with the tax loss harvesting. And as always, evaluate your own tax situation with your planning and your investments to see if tax loss harvesting is something you should consider before year end.